Zimbabwean authorities are fairly bullish about growth this year. Late last year, we heard that the economy could grow 8.1%. Now they're even talking about 9.3%. Skeptics are a little more reserved in their outlook and saying no, more realistic figures 5%. So what is it, 8%, 9% or 5%?
Well, RMB also expects it to grow about 5% this year and the next year. I think those numbers are a bit unrealistic because the expectations of the government was more of the foreign donors' money coming in. If you see in the midterm budget report, the government actually said they expect the economy to grow by 5.4% because they do not expect this foreign inflows. We haven't seen this foreign inflows in the past 6 months, so we also don't expect it to grow by about 8%.
Okay, nonetheless, the recovery has been fueled by growth in the mining economy, growing over 45%, agriculture as well, growing 33% or so per annum. How much more expansion can we see post-recovery?
It's difficult to put numbers to it, but the expansion is mainly due to the national unity government that they've put together and the dollarization of the economy. So those things are the big drivers behind it. But then you must still look at the risks. It's still the political risks that these sectors have to face. Will the industry be indigenization will come through into the industry? Those things the sectors must still worry about.
Okay, although Zimbabwe is a dollarized economy and that's helped to stabilize at least monetary reform in that economy, Zimbabwe is still heavily influenced by the South African rand and imports from South Africa, especially fuel imports, electricity and energy. How will the rand's performance impact on this economy despite it being dollarized?
Well, because Zimbabwe uses the rand just as much as it uses the dollar and it pays in rands for its imports, so it's import inflation that's affecting the economy. So not that we're saying hyperinflation will come back, and also it's more the cost push inflation, not demand pull. So yes, we do see inflation rising slightly this year to about 7.5%, mainly because of import inflation.
Let's talk about the role of the Zimbabwean Reserve Bank. That's been a hotly contested political issue. What we do know is that at least the Reserve Bank has regained its status as a lender of last resort. What does that mean?
It's called a lender of last resort, but it actually can't lend at the moment. That's the predicament the Reserve Bank is sitting with. Even though there's some cash injections have been made by the government, it's definitely not enough. There's not enough liquidity in the banking sector. So the commercial banks are struggling to get money from the Reserve Bank, and even the commercial banks are even scared to lend because there's no proper credit bureaus. The actual consumers are also too afraid to lend because of the high rates. So it's a vicious circle.
I mean, the interesting phenomenon around this is despite the liabilities that may be incurred by the banks not being able to service them, the Reserve Bank not being able to step in as a last gap measure, we do see some investment flows. We do see big banks like Ecobank talking about entering the Zimbabwean market, the SR Group from India talking about major investments in Zimbabwe. So you get a sense that despite the policy limitations, some investors are bullish about Zimbabwe. What's your view?
I do think you look at economies that show good growth performances. I will say what we've seen from the past few years in Zimbabwe, growth has been much better than it used to be. Those are investors' main figures to look at, is also the growth in the economies. So those aspects investors can look at, and also with the fact that the banking sector is trying to improve. The Reserve Bank just fired almost 3/4 of their staff just to streamline themselves. So you see these reforms trying to come through, and I think that will push investors more into the economy.
Let's talk about what is available for the Zimbabwean government to spend, where they cannot rely on the private sector to come through. Budget 2011, they have 3.2 billion to spend. It's quite modest. How much of that is going to be derived from taxes, and how much can they rely on investment flows?
Well, the government is expecting quite an optimistic 2.7 billion from domestic revenue. Just the fact that the revenue service in the country is not as advanced as, say, South Africa's services. So we don't really know if the 2.7 billion will be made. Then the rest of the 500 million to be able to fund this budget, they expect from donors. And with the fact that the political environment is still so unstable, we do not see that 500 million coming through. So we actually do not see the economy even reaching this modest 3.2% budget allocation.
You keep on referring to the political situation, and I suppose it's one of those things that you cannot ignore. A unity government that many people say is shaky, an election scheduled for later this year, but even then you're not sure whether we can stick to that timetable, because you hear one side, like the MDC, questioning the legitimacy and the legality, and ZANU-PF going ahead with its electoral program. The political outlook for you?
It's unfortunately too soon to have an election like they wanted to have, for instance, in May. That was one of the dates that was thrown out. Only because the electoral reforms haven't been instituted or implemented. Also, the new constitution that they want to implement, the two parties haven't even decided what should be in the new constitution. And then we saw in 2008, the elections, there was violence. The elections, there were irregularities. So I definitely think it is too soon. There has been rumours in local newspapers that the government might just extend it much further than we think. So we just have to wait and see.
Okay, we have to leave it there. Thanks so much to you, Celeste Fauconnier, who's with Rand Merchant Bank, talking to us about the situation in Zimbabwe. A positive outlook, 5.4% growth going forward, but some political risk factors that remain. After the break.